You wake up in the morning and realize your bank account grows while you sleep, where each digit in your finance app is a promise of travel, freedom, and security. Does it sound like science fiction? Get ready to uncover investment strategies that can turn that fiction into your everyday reality. Ever thought only Wall Street geniuses could multiply their money? Today, we're shattering that myth. We'll reveal how, with a few simple steps, you could be on your path to financial independence. And no, you don't need to be a cryptocurrency expert or have a fortune to start. So stay with us, because this could forever change the way you view investments. Let's dust off the truth behind those intimidating financial headlines. Forget complex jargon and the image of an investor in a suit monitoring screens full of charts all day. Here, reality is far more accessible. Did you know that the key to investment success isn't always boldness, but consistency and strategy? Yes, just as you heard. Investing isn't just for the big players. It's for you, for me, for everyone. And best of all, starting your journey to financial freedom can be easier than you've been led to believe. When we talk about investing in indexes, we're talking about joining a journey where the largest and most stable companies lead you down the path of economic growth. It's like buying a ticket to a concert where all your favorite bands play together. An index fund lets you own a small part of all these companies, spreading your investments so you don't depend on the success or failure of a single one. And here comes the interesting part. Historically, indexes like the S&P 500 have shown a long-term upward trend. This means that, although there will be ups and downs along the way, the general direction has been upwards. Moreover, investing in indexes reduces the risk of making hasty decisions based on daily market fluctuations because you're playing a bigger game, the game of steady and sustained growth. With just a few clicks, you can become a co-owner of a diversified portfolio that includes tech giants, energy leaders, health innovators, and much more. This is how you can make your money work as hard as you do, without the need to check every individual stock every day. Simplification, diversification, and participation in the entire market's growth. That's investing in indexes. If investing in indexes is like having a pass to all the best bands, then compound interest is like the echo that continues to resonate long after the music has ended. It's the silent force that can turn small amounts of money into fortunes, with the only requirement being time. Think of compound interest like a snowball rolling downhill. You start with something small, a handful of snow, but as it rolls, it grows and picks up more snow. With each turn, it not only adds the snow it touches, but also everything it has accumulated along the way. That's how your investment grows. The interest you earn is added to your initial capital and then generates more interest on itself. Let's put it in an example. If you invest $1,000 with an annual return of 7%, in 1 year you'll have $1,070. But don't stop there. Leave it invested. And the next year you'll earn interest on those $1,070, not just on your original investment. Over time, this repetition makes your account grow exponentially, not linearly. And here's the magical part. The sooner you start, the less you need to invest to reach the same goal. Time is so crucial here that someone who invests during their 20s could end up with more money than someone who invests more but starts in their 30s. Compound interest favors the patient, the long-term investor who understands the value of starting early and staying consistent. It's not about finding the next big stock or investment gimmick. It's about leveraging time and letting math do its work. That's how compound interest earns its title as the eighth wonder of the world in the realm of finance. Within the dizzying world of cryptocurrencies, there's much more than Bitcoin and Ethereum. While these titans lead the stage, there's a vast ecosystem of crypto assets that offer equally fascinating opportunities. This is where diversification comes to life, allowing you to explore the potential for innovation and growth that resides in the less illuminated corners of the cryptosphere. But what does diversifying in cryptocurrencies mean? It's not just buying different coins and hoping for the best. It's a calculated approach that seeks balance. Just like in traditional investing, you wouldn't want to put all your eggs in one basket. With diversification, you spread your investment across different assets to mitigate risks and capitalize on different sources of potential growth. To do this effectively, you might consider various factors: the underlying technology of the cryptocurrency, its use case, the community backing it, its market performance, and its potential to be part of the digital economy of the future. There are crypto assets focused on privacy, others that enable smart contracts, some used in decentralized finance, DeFi, and those aiming to be the day-to-day digital currency. Diversifying in crypto assets also means staying updated on the latest trends: NFTs, governance tokens, stable coins, and tokens linked to blockchain projects with real-world use cases. These are just a few examples of how the field of cryptocurrencies is expanding and offering new forms of investment. However, here comes a word of caution. The cryptocurrency market can be volatile and is constantly evolving. It's crucial that your diversification strategy includes thorough research and ongoing monitoring of your investments. It's also vital to never invest more than you're willing to lose. In the end, diversifying in crypto assets is not just an investment strategy. It's a journey of continuous education in a sector on the edge of financial innovation. And this journey can be as exciting and potentially lucrative as you decide to make it.
If this video is opening your eyes to finance, hit like to support this channel and help us keep uploading more content. Comment on your biggest revelation so far and subscribe with the bell on so you don't miss any financial secrets. And if you have a friend or family member who could benefit from this video, spread the word by sharing it. Let's continue with more strategies that will change your financial future.
When the waves of the financial market stir and the word crisis resonates in the headlines, many investors rush to seek refuge. But for the savvy investor, a crisis is not just a moment of caution, it's a fertile ground for opportunities. During turbulent times, while some see chaos, others see a market discount. Think about it. Crises often lead to a generalized devaluation of assets. This means you can find valuable investments at much lower prices than during periods of stability. It's the time to buy value at discount prices, finding those robust companies that are temporarily underestimated by the market but have solid fundamentals to recover and grow in the long term. Investing during times of crisis requires a balanced approach and careful due diligence. It's about looking for companies with low debt, good liquidity, a strong value proposition, and a history of resilience during tough times. It's also about broadening your vision to sectors traditionally benefiting during or after a crisis, such as basic consumer goods, health, or technology. Moreover, crises often accelerate certain structural changes in the economy. They boost innovation, foster the adoption of new technologies, and can change consumption habits. Investing in companies at the forefront of these changes can result in significant growth as the new economic landscape emerges. Here lies the importance of having a financial cushion and not risking more than necessary. Investing in times of crisis is not for the faint-hearted and is definitely not a blind gamble. It's a deliberate strategy focused on a deep understanding of the markets and the ability to remain calm when others give in to panic. And remember, crises come and go, but the principles of smart investing and recognizing long-term quality remain constant. In crises, patience and strategic perspective can be your most valuable allies. The difference between dreaming about financial freedom and achieving it lies in planning and long-term strategy. This approach is not just about picking the right investments. It's about building a lighthouse to guide your financial decisions over time, ensuring that every step brings you closer to your goals. The first step towards a long-term strategy is clearly defining your financial goals. Do you want to secure your retirement? Save for your children's education? Build an emergency fund? Each goal will have its own time horizon and associated risk tolerance. By identifying your objectives, you can begin to chart the path toward them. Then, diversification is not just a tactic to mitigate risks. It's a fundamental principle of a long-term strategy. Don't just diversify among different types of assets, but also consider geographic and sector diversification. This will help you protect against the volatility of a specific market and take advantage of global growth. Regular reassessment and adjustment of your portfolio are equally crucial. The market changes, as do your personal circumstances and goals. An annual review allows you to make necessary adjustments to align your portfolio with your long-term strategy and current objectives. Patience and discipline are virtues of long-term investing. Resisting the urge to follow the latest trends and staying steady in the face of market volatility requires a solid mental approach. History has shown that markets tend to rise over the long term, and commitment to your strategy is essential to capitalize on this growth. Lastly, but importantly, continuous financial education is vital. The world of finance is dynamic, with new opportunities and challenges constantly emerging. Stay informed and educated to make well-founded decisions that keep you on the path to your financial goals. In summary, successful long-term planning and strategy are the results of setting clear objectives, diversifying intelligently, periodically reassessing your portfolio, maintaining discipline, and always seeking to expand your financial knowledge. This approach empowers you to build a solid financial foundation that will withstand the test of time and bring you step by step closer to the life you dream of. Having the right tools and resources is as crucial as having the knowledge to use them. We live in a golden age of financial technology, where the ability to manage and multiply your wealth is at your fingertips. First, let's talk about online investment platforms and mobile apps. These are essential gateways for any investor, offering everything from buying stocks, bonds, and ETFs to crypto assets, all from the palm of your hand, allowing users to operate with no commissions or at very low costs. Next, we have robo-advisors, which use algorithms to manage your investment portfolio based on your risk profile and financial goals. These automated services are perfect for those who prefer a passive investment strategy and wish to delegate the selection and management of assets to experts. For those interested in expanding their knowledge, countless educational resources are available. Platforms like Coursera and Udemy offer courses on everything from investment fundamentals to advanced strategies and market analysis. Moreover, books like The Intelligent Investor by Benjamin Graham and Rich Dad Poor Dad by Robert Kiyosaki remain essential readings to understand the psychology behind successful investing and how to build wealth over the long term. Podcasts and financial blogs are also valuable resources, providing updated market analysis, expert interviews, and practical tips for making better financial decisions. Listening to or reading about other investors' experiences can offer you new perspectives and strategies you might not have considered. Finally, but certainly not least importantly, social media and online forums. They allow you to connect with a global community of investors. Here you can share experiences, ask questions, and stay up to date with the latest trends and financial news. Arming yourself with the right tools and resources can transform your investment journey from one that's confusing and discouraging to a clear and empowering path toward financial freedom. The key is to use these resources to inform yourself, not to overwhelm. And so, friends, we close another chapter on our journey toward financial freedom. Today, we've explored strategies, debunked myths, and equipped ourselves with tools that, if wisely used, can change the course of our financial lives. But remember, knowledge without action is like an engine without fuel. So I encourage you to take that first small but firm step towards your financial goals. Ready to transform your financial future? Then subscribe, share this video with those you believe need a push in the right direction, and don't forget to like if you found value in our time together today. Until next time, keep investing, keep learning, and above all, keep growing. See you in the next video.